Hi, and welcome to Why Everyone Can and Should Invest, a crash course by Charlie Cameron. Because this is a crash course, I'm going to try and keep everything in this course short and sweet. But before I go into why everyone can and should invest, first I need to do an introduction to investing, what it is, why people do it, different ways people invest, and the one I'm going to focus on and why. So let's jump right into it. So the definition of investing basically is just putting money towards something with the expectation that the value will increase over time. So you see a little stick figure there, he's got a few dollars, he throws it into this investment, whatever that is, and over time, it becomes a bigger chunk of change, and it makes you happy because that's more money for you. So investments essentially just make you money, and that can become a passive income method for you. And some typical reasons people invest, the number one reason, the biggest reason to invest is so that you can build up a big chunk of change to retire off of. And I'll show you why everyone needs to do this in a later lesson. Homes, maybe you want to put a down payment on a home and you want to use investing to build up that chunk of change. Or maybe you want to buy a whole home or vacation home. You can have fun goals like a luxury sports car or a boat or an RV. Pretty much anything you want to do, you can set out to achieve via investing, and it's going to cost you less to do it through investing than if you just saved the money in a checking or savings account. So some common investing paths or vehicles, you might say. The most common one, of course, is the stock market, right? That's stocks and bonds. And that's what we're going to focus on in this course. But there's also real estate. You could buy houses to rent or flip. There's also businesses. You could either start your own or purchase a franchise, or you could fund a friend's business to get a certain percentage of the profit back, something to that effect. So there's different ways to invest. But we're going to focus on stock market investing. And it's not something that's necessarily big and scary, even though it does appear so when you first start to dig into what stock market investing is, right? There's a lot of crazy terms out there, but it doesn't have to be scary. It can actually be very simplified, and with just a few moves, you can get started to be on track to long-term proven earnings. And that's without active involvement or active trading, and that's without the risks associated with purchasing individual stocks. And that's without paying for big portfolio managers that invest your money for you. And that's without costing you very much time at all. In fact, the hardest part's really getting started. And after that, you can tweak here and there. But it really is simple once you get going. So why am I going to talk about stock market investing over those other things we discussed, like real estate and owning a business? It is the easiest way to get started in investing. Literally all you need is a fraction of your income, just a piece of your paycheck, even a small piece, and internet access, which I know you already have because you're watching this course. You don't have to hassle with real estate, which can be a huge pain. You don't have to go through all the hard work of starting or buying a business. And you don't have to take the risks associated with those or with individual stocks. Now, if you want to do any of those other investing methods in real estate and business, I urge you to go out and do that. I'm just saying that this is a way you can get started right now, and you can go do all those other things as well. So why not buying individual stocks? So you want to go out and buy Google, for example. I think that's great, but it's not in the content of this short course because it is very risky to buy individual stocks. Unless you're going to buy 300 of them, it is extremely risky to do this. And most people want to avoid high risk. I know I do. If you do want to buy individual stocks, which I do as well, I treat it as more of a hobby, like gambling in Vegas, something I'm okay with losing. I could give you some examples of this, like Enron or BlackBerry, but you can look them up yourself. Owning individual stocks is very risky. And why do individual stock market investors fail? People who buy stocks on their own without a good foundation, financial knowledge. They don't have commerce degrees, right? Lay people like me. People like me perform far worse than the overall market when they buy individual stocks because they're emotional about it. They buy super cool stocks like, I don't know, Apple. Say Apple looks like it's doing really well. It's doing so good. The stock market's hot. Apple's hot. I'm going to buy it. Well, that's great, but that's probably when it's at a peak, right? Say, I don't know, $400 a share. I don't know what Apple is right now. And then they sell when things look bad. So the whole stock market, the tech industry is crashing, and all of a sudden Apple's worth $300, and they sell. This is a bad time to be in the stock market. That's the exact opposite of what you want to do. In that case, you lost $100 a share, right? So That's not what you want to do. You actually want to do the opposite, buy low, sell high. And a lot of people can't handle that kind of high risk atmosphere and do the opposite. The other things about individual stocks is there's no diversification. So if you only bought Apple and Apple tanked tomorrow like BlackBerry did a decade or more ago, then you'd be out of it. That'd be it. You'd lose most of that money. So we're not going to talk about individual stock investing. Instead, we're going to talk about something else. So we can ensure sure returns, say that 3 times quickly, by simplified market investing. And it's simplified by using mutual funds or maybe ETFs. And we can get sure returns using the long-term uptrend of the total stock market. So this can be a sure win for us. And the earlier you start, the more you can earn. So we're just going to jump right into it.